But it's not as if the Chinese woke up and like venture capitaled their own factories and figured out what products to make that would be appealing to a U.S. audience. Most of what was produced because American companies set up factories and made stuff that they were making elsewhere. Now, again, whether or not this trend benefits simply American capital at the expense of American labor is an interesting question. But it's undoubtedly true that those trends have been in place long before China is on the horizon. Because before China, it was Mexico. And it was Ross Perot railing against the free trade organ NAFTA as creating that giant sucking sound that was going to lead all of jobs to go south. And before Mexico, it was Taiwan and South Korea. So that the merge of labor to lower cost areas has been going on for decades. And it's not a product of China, even though China is the latest iteration of it. This is often now seen as a system that kind of undermines the American manufacturing base and enhances the competitive abilities of China. But in my view, it's also a system essentially of capital and ideas in motion in a way that national statistics do an extremely poor job of encapsulating. That much vaunted trade deficit figure of $200–300 billion a year assumes that every dollar of trade with China is a dollar that leaves the United States and goes to China. But if 15% of that trade deficit is Walmart sourcing its goods, a lot of that money doesn't go to China. It goes, yes, to Walmart. It goes to people working on the Port of Long Beach offloading the goods. It goes to Burlington Northern Railroad, which Warren Buffett just bought the rest of, shipping those goods throughout the country. It doesn't all go in that direction. It's not even clear, in fact, where things are actually made, even though they always get ascribed to one country or another. Because if GE makes a washing machine in a plant in northern China with polymers and plastics that have been initially made in Malaysia and circuit boards that are produced in Taiwan and some cloth that was sourced from Cambodia with initially having been grown in Texas that then gets assembled partly in a plant in southern China and then gets shipped to a plant in northern China via Hong Kong, where it then counts as a Chinese export to Hong Kong and a Hong Kong export to China, and then it gets sent to the United States. Where was that thing made? By a company who shares trade on the New York Stock Exchange. Or if it's a BlackBerry phone and you have the same thing, it gets sent to the United States for a company that's incorporated in Canada who shares trade on the New York Stock Exchange. So national trade statistics do a very bad job capturing those realities.